Good morning friends, I am Ashish Agrawal from Team NGOenabler, and on multiple requests for releasing the video on income tax form for the charitable organizations, that is ITR7, here I am today to discuss and handhold you all in filling the income tax form relevant for the charitable organizations, that is ITR7. Before we start, let me thank you all for giving so much support and love to our previous videos on Form 10B and 10BB. The entire team of NGOenabler is grateful to all the subscribers and viewers of our channel. As you must be aware by now, the due date for filing of income tax return for the charitable organizations was extended from 31st October to 30th November 2023, which is soon arriving. So today I will be handholding and guiding you all in filling the income tax return for your organization through the online utility available on the income tax portal. So let's begin. Visit the income tax portal, and in the downloads section you will find at last the utility of ITR7. Click on utility. Once you have downloaded and extracted the files, you will see the application of ITD e-filing. Just click on that and click on run. You will see here desktop utility ITR7. It will take some time to initialize the utility. Then click on continue and then file returns. Here three options will be there. One is download pre-filled data, which will get pre-filled from the income tax website. Then is import pre-filled data, which you must have already saved in your system. And the third is import draft ITR filed in online mode, or import JSN, which you must have created through the income tax softwares which you must be using. So let's click on download pre-filled data and continue. They will ask for the PAN of the organization and then the assessment year, which is 23-24. Click on proceed. Here they will ask you to log in to the income tax portal. Once you get logged in, you will see the PAN, the name, assessment year, all will be pre-filled. Click on file return. Then you have to select the status of your organization. Here the only option will be AOP, because it's neither a company nor a limited liability partnership, local authority, partnership firm, or artificial juridical person. So if your organization is a section 8 company, only then you need to select company. If your organization is in the nature of trust or a society, then you have to select association of persons. Then there are two options. I know which schedules are applicable to me, or help me decide which schedules are applicable. So I click on I know which schedules are applicable to me and click on proceed with ITR7. And then click on let's get started. Here you need to select all the schedules which are relevant and applicable to your organization. Since we selected that we know what schedules are applicable, here we have to select ourselves that which schedules or which annexures or which part of the form is applicable to us. You will see that the mandatory fields are already selected and they will not allow you to deselect it also. So the general information is applicable to you as mandatory fields. Then click on continue. You will move on to the income part. Of course, being a charitable organization, Schedule VC, which is details of voluntary contribution, is mandatory. Schedule AI is of course mandatory because it's details of aggregate of income. House property you can untick. Capital gains, let's keep it selected. Usually capital gains are also not a normal schedule which is applicable. Only if you have sold any assets, capital gain is there. I am not selecting schedule VDA, that is income from transfer of virtual digital assets. Schedule other sources, of course it's applicable because there must be certain income. Schedule BP is not applicable until unless you are running a business undertaking under your organization. Schedule pass-through income is also not applicable. Schedule income taxable at special rates is a mandatory field, so we have to keep it selected. Schedule 115 TD, which is details of accredited income. This is applicable only when the organization's Section 12A registration is revoked by the income tax authorities. Only then Schedule 115 TD is applicable. Schedule 115 BBI is also not applicable if you don't have any specified income under that section. So I am not selecting both the sections. Current year losses is mandatory. Then we move on to the exemption section. Schedule I, if you have accumulated any income under section 11 subsection 2, then schedule I you have to fill. Schedule IA is applicable only when any previous accumulations have not been utilized as per the norms, which is within 5 years, and it has to be taxed under section 11 subsection 3. Only then schedule IA is applicable. So I am not selecting that schedule. Let's select schedule D, where the option exercise amount has to be filled. Again, schedule DA, we are not selecting it because it's related to the disallowance. Then schedule J, where the statements of funds and the investments has to be given. So this of course has to be selected. Then schedule A, where the revenue expenditure details has to be given, that has to be selected. Let me select schedule IA and schedule DA also for explaining. Then part B, TTI and schedule taxes paid, of course, they both are mandatory fields. Balance sheet is mandatory, of course. Schedule R is applicable only to those organizations who have utilized their corpus and the amount doesn't match with the balance sheet. So let's select it for the time being. Schedule OA is applicable only to the organizations having business activity. Let's keep it selected. And then FSI or summary of tax relief for foreign assets, I'm not selecting because it relates to the income or expenses outside India. So let's click on continue. You will see a note here, income tax return is pre-filled based on the information available for pre-fill on e-filing portal. Click on OK and you will see whatever you have selected is there on the screen. If you want to add more schedules later, you can add by clicking on add more schedules. So let's begin. First is part A, general 1. You will see in the status AOP is already auto selected because you have selected it at the time of starting the utility. Then the sub status is public charitable trust. Once you click on it, you will have the option of society, public charitable trust, any other AOP or BOI. So if it's a society, you can select this option. If it's a trust, you can select public charitable trust. If it's neither a trust nor a society, still you are filing ITR7, you can select any other AOP or BOI. Here, if you select company, only then the substatus is not allowed. Otherwise, there can be a substatus of Section 8 company. You will see the personal information is already filled directly from the portal. In this option, please specify the section under which the exemption is claimed. Click on section 11. In the next point, you need to fill whether you have any projects or institution being run under the trust or the society. So if you are running any school or a hostel or any other type of organizations under the trust, like old age homes, orphanage, any kind of organization, and it has a different name, then you need to give the details in point number A18. Or if you are running any FCRA projects, then you have to give the details under point number A18. So let's click on yes, and you see the kind of details they are asking: name of the project or institution, nature of activity, and the classification. So suppose I am running a sponsorship program. So the nature of activity will of course be charitable and religious, and the classification will be relief to poor. Because in our opinion, the school itself is not running any school or educational institution, and that's why it should not be education but relief to poor. Click on add. Now suppose the organization is running any school. So give the name of the school. Nature of activity again will be charitable and religious, and classification will be education. Click on add. So in this way, you need to add all the relevant projects and the institutions being run under the trust or the society. In point number A19, details of registration or provisional registration or approval under the Income Tax Act. So here you need to give the details of your 12A registration. So select 12A or 12AB, choose the date of registration, which you can find it out from form 10AC. Then the approval number, and then the approving authority can be Commissioner or Chief Commissioner of Income Tax. Date from which it's applicable. So let's select the date from which it's applicable and click on add. Do you want to add any other registration or approval? Yes. If you are registered under section 80G, then you need to select 80G 2A4. Again the date. The approval number. How you will find out that which number is of 12A and which number is of 80G? Because for both form 10AC was issued. If there is after the PAN, if there is F, then it is 80G. If it is E, then it is 12A. Although it's clearly mentioned also in form 10AC that which number is 12A and which number is 80G. Again, the approving authority remains the same. Let's choose the date. You see both 12A and 80G details have come. Here it's written indicate the registration section based on which exemption is claimed in the return. So 12A is false and 80G is true, but it should be the opposite. So let's tick on, at the time of filling 12A, click on the registration section based on which exemption is claimed in the return. So of course it will be 12A and not 80G. So 12A against 12A, it will be showing true, and against 80G it will be showing false. This doesn't mean that your number is wrong or your details are wrong. It is showing true and false according to the registration section on which exemption is claimed in the return. So a charitable organization can claim exemption under section 12A because 80G is usually for the donors to claim tax benefits and not for the organization. So again, I'm showing it while filling 12A details. You need to click here, indicate the registration section based on which exemption is claimed in the return. In point number A20, details of registration or approval under any other law other than the Income Tax Act, including the registration under FCRA, Darpan portal or registration with SEBI. So here the organization need to give the FCRA detail, the Darpan portal or any other law. Under any other law, you can also fill the CSR registration details if your organization is registered for receiving CSR funds. So let's give FCRA date. The date of approval, suppose, is April 22. Approval number, approving authority will be Ministry of Home Affairs in case of FCRA, and click on add. Similarly, you have to fill the registration details of Darpan portal and of Ministry of Corporate Affairs for CSR registration. Then the contact details will be auto-filled from your income tax portal. The filing status will be 139.1. You have to select section 139.1 because you are filing the return before the due date. The residential status will of course be resident. Whether any income included in total income for which claim under section 90, 91 has been made, it's not applicable. So click no and click on save. Then comes the bank details. You will see that all the banks available on your income tax portal is available here. So please check the details of all the banks and nominate one of the banks for getting the refund. So since you have clicked on autofill from the income tax portal, that's why the bank details have been reflected here automatically. If you have opened another bank account in 22-23, click on add another and then give the IFSC code, the name of the bank and the account number and click on add. That bank too will be added. Click on confirm, and once you click on confirm, you will see a green tick with confirmed mentioned on that part of the utility. Let's move on to the next part, part A, general 2. Here they are asking in point number A23, wherein any of the projects or institutions run by you, one of the charitable purposes is advancement of any other object of general public utility. If the organization is conducting any activity which relates to this point, that is advancement of any other object of general public utility, only then click yes, and then they will ask whether the activities are in the nature of trade, commerce or business. Once you click yes, they will ask the percentage of the total receipts. Similarly here, if you click yes, they will ask the percentage of receipt from such activity vis-a-vis the total receipts. So for the time being, click no. In point number A24, is there any change in the objects or activities during the year on the basis of which approval or registration or provisional registration was granted? So let's click no for the time being, because if you click yes, they will ask that whether you have furnished or refile the form within 30 days of such change, because that is a mandate. Is this your first return? So if you are filing ITR7 first time, only then click yes or click no. Then is the provision of section 1023C or section 1310. So section 1310 is applicable only when you have violated a certain provisions of section 11 and 12, only then it's applicable. So let's click no. Then comes the audit information. So you need to give the details of your auditor. Are you liable for the audit? Yes. Because if your total receipts exceed rupees 2,50,000, which I've explained in one of my earlier videos, that when the charitable organizations are required to mandatorily audit their books of accounts, in that video I have specified that if your total receipts exceed rupees 2,50,000, only then your organization is liable for the audit. So if your organization is liable for the audit, of course Form 10B or 10BB must have filed by 31st October by your auditor. And if your total receipts is below 2,50,000, then click no and directly file the return. So once you click yes, you need to fill the details of the audit, that under which section you are liable for the audit. So it will be 12A1B, the date of audit. The date of audit means the date of audit report when the balance sheet was signed. So let's keep it 6 September. Whether the accounts have been audited by an accountant, yes. Give the name of your auditor, the membership number. Here you need to specify the proprietorship firm or the firm's name of the auditor. PAN, of the audit firm. Aadhaar, it's not a mandatory field, so you can skip this point also. Again, the date of audit report should be same what you have mentioned here. So let's keep it 6 September 2023. And date of furnishing of audit report. The date of furnishing of audit report means the day you have filed Form 10B or 10BB, whatever was applicable to you. So let's keep it 18th October and click on add. Whether you are liable to audit under any other act other than Income Tax Act, let's keep it no. Because although under FCRA also you are liable to audit, but if you will click yes and select here foreign contribution, then the date of audit, you can put here date of audit because they are not asking the date of furnishing of audit. But here, if you will see the section and the date of furnishing the audit report, many organizations might have not furnished the audit report because the last date for filing the annual return under FCRA is 31st December 2023. So it will be difficult for them to give a date here. So let's avoid it. However, the organizations which are registered under Companies Act, they must have already filed the ROC or might be in the process of filing the ROC. They must select this Companies Act and give the section under which they are liable for the audit and choose a date for furnishing the AOC 4 form. So for the time being, I am clicking no. Then is the members information. Point number A29.1 is not applicable because it is required to be filled by venture capital fund or investment fund. Point number 2 is applicable. Particulars regarding the authors, founders, trustees, managers of the trust to be mandatorily filled in by all the persons filing ITR7. Please don't miss this point, to be mandatorily filled, because many organizations are not filling the details of their trustees or the authors or their founders because here the star mark is not given, so they usually miss it. But in bracket it's written to be mandatorily filled in by all the persons filing ITR7. So once you click on add, 4 options will open. The first option is details of all the authors, founders, settlers, trustees, members of the society, members of the governing council, or the shareholders holding 5% or more of the shareholding at any time during the previous year. So in our opinion, all the board of trustees or the governing body members details has to be filled here. In case of company, fill the board of directors as well as those shareholders who are holding more than 5%. So once you click on add details, you will see the name is being asked, the relation is asked, percentage of shareholding, whether resident of India or not, their unique identification number which can be Aadhaar or PAN, the ID code means the number of the Aadhaar or the PAN, and their address, mobile number and email ID. So let's fill one of the trustees. For example, you can select author. In case of trust, you can select trustee. In case of society, you can fill office bearer or principal officer for the president and the vice president. the secretary option is given here. So please fill secretary option correctly and don't fill office bearer or principal officer in case of secretary. Then when there is a director, in case of companies, fill managing director or director, whatever is the designation. The director option is also given here. And in case of shareholder, the shareholder holding 5% or more of the shareholding, that option is also available. So I am clicking on trustee. Whether resident of India, yes. Unique identification number, suppose PAN. The address. Mobile number. And email ID. And click on add. Of course, percentage of shareholding will be 0 in case of trustees. So click on add. Then in case the persons or the governing body members are natural persons or beneficial owners, 5% or more of such person at any time during the previous year, only then these details have to be filled, which we can avoid here. Then name of the persons who have or made substantial contribution to the trust or institution in terms of section 13(3)(b). So in 13(3)(b), it's mentioned that any donors who has given more than 50,000 rupees to the organization, they are considered as specified persons under section 13(3)(b). So those details has to be filled here. Now what are the kind of details they are asking? Name, address, PAN or Aadhaar, and the Aadhaar ID. So let's assume that there is no substantial donors for this trust. Otherwise, if any, I am repeating, if otherwise any donor who has contributed more than 50,000 rupees to the organization, these details has to be filled here. And if any relatives are there for whose benefit the organization has spent any money of the author, founder, trustee or the manager or the substantial contributor, the details again has to be filled in part number D. Again, you see what they are asking: name, address, PAN and the Aadhaar. So let's click on confirm. So once all the parts are filled here, again click on confirm and you will see outside the green tick has come. Then there is schedule I. Schedule I needs to be filled only when the amount has been accumulated under section 11(2), when the organization has not been able to apply 85% of the total receipts during the year and have opted for 5 years accumulation. Only then you have to fill schedule I. Now in schedule I, you also need to fill the back years accumulation which is still outstanding to be used, right? So you see here the year of accumulation, they are giving multiple options of the earlier years also. So suppose I am filling for this year, 22-23, the organization might have accumulated, suppose 1 lakh rupees. The purpose of accumulation has to be given and you cannot write general purpose. You have to specify the specific purpose. It's written here that you have to specify the exact purpose for which you will be utilizing it and you cannot deviate from the purpose without permission from the Commissioner of Income Tax. So let's specify purchase of immovable property. Here you have to give the details only when you have utilized it for any other purpose. So let's give 0. Now this point, amount invested or deposited in the modes specified in section 11(5) out of 11(12). So here you need to confirm. The income tax department is confirming that whether this entire 1 lakh rupees has been invested in the modes specified under section 11(5), because only then as per the act you are allowed this application. If you have invested in modes other than specified in section 11(5), only then you have to give the amount in this point. Click on add. Now suppose if you have accumulation in any earlier years also, then you have to click on add another and select 2021. So suppose in 2021 there was amount accumulated by the organization. Suppose it was 5 lakh rupees. The purpose of accumulation was suppose purchase of land. In this point it's mentioned here amount applied for charitable purposes up to the beginning of the previous year. So as on 1st April 23, what was the amount that was utilized from this 5 lakh rupees? Suppose 3 lakh was utilized. You will see that the balance and the balance available for application will automatically change to 2 lakh rupees. Amount taxed in any earlier assessment year? No. Now come to this point. Here it's mentioned amount applied for charitable purposes during the previous year out of previous year's accumulation. This means that this balance 2 lakh which was left on 1st April 22, how much amount was utilized in 22-23 for which the return is being filed out of this 2 lakh rupees which was left. Suppose 1 lakh was utilized for the same purpose for which it was accumulated. In this point it is asked amount applied for purposes other than the purpose for which such accumulation was made. So here we will put 0. Amount invested or deposited in the modes is specified. Now for your understanding, here the amount should match at least with the closing balance for this year. So let's put 1 lakh rupees. And here where the amount invested other than the mode specified under section 11.5, it should be 0. In point number 14, it's written amount which is not utilized during the period of accumulation. So the period of accumulation is usually 5 years, right? So in this point, I think in my understanding, it should be 0 because 5 years is not completed since the accumulation was done in 2021. And click on add. When you will check here for financial year 2021, you will find the balance to be utilized is still 2 lakh. Balance amount available for application 1 lakh which you accumulated for 22-23. This one. And the balance which is left from the accumulation of 2021 which is 1 lakh. So as on 31st March 2023, the organization need to apply this 2 lakh rupees. Click on confirm. Then schedule IA. Here I mentioned that schedule IA you need to fill only when you have not been able to utilize the accumulated income and it has been taxed in the earlier assessment year. So in our case, there is no such non-utilization of the accumulated income, but I clicked yes on this section only to explain you why schedule IA or when schedule IA shall be applicable. So you see here they are asking in which year the accumulation was done so that they can disallow if it was not utilized within the period of 5 years. So without filling it, I am clicking on confirm. Then is schedule D. In schedule D, if the organization has not been able to utilize the 85% amount and they have not opted for the 5 years accumulation, they can opt for clause 2 of explanation 1 to subsection 1 of section 11, which is the option exercise amount, where the organization need to utilize the funds next year or the year in which the amount is received. So here again, year in which the income is deemed to be applied. Let's click on 22-23. Amount deemed to be applied during the previous year of deeming. So suppose again 1 lakh rupees I am filling here. Reason. One is income has not been received during that year or there is any other reason. So if you will select income has not been received during that year, you have to utilize it in the year in which it is received. And if you will select any other reason, then you have to apply the amount in the subsequent financial year. So let's select any other reason. You have to give the reason. Suppose in case of schools, they usually get the funds for the admission or the annual collections of the next year in the month of March. So you can write here funds received during the later part of the year. Sometimes even the donors give certain donations at the end of the year which cannot be utilized by the organization due to shortage of time in completion of the financial year. So let's write here funds received during the later part of the year. In part number 4 of this point, out of deemed application claimed, amount required to be applied. So of course the entire amount is required to be applied. Amount taxed in any early assessment year 0. Out of the deemed application claimed, amount required to be applied during the financial year pertaining to the current assessment year. Of course it's 0 because the amount has been deemed to be applied for this year, the current financial year, which is 22-23. You will see here 1 lakh will automatically come because it's written here balance amount of deemed income being exemption claimed in earlier years on account of deemed application and required to be applied in financial year 23-24 onwards. Click on confirm. Now suppose the organization has opted for option exercise amount under subsection 1 of section 11 in 21-22. Suppose it was 50,000 rupees. Reason again, it was any other reason. Amount of deemed application claimed, amount required to be applied. So of course this 50,000 should have been utilized in financial year 22-23. Amount taxed will be 0. Out of the deemed application claimed, amount required to be applied during the financial year. Of course the entire 50,000 has to be applied. Now what amount was utilized during the current financial year? If entire 50,000 was not utilized, then it will be liable to tax. You see, if I will put here 0, this 50,000 will be automatically filled in section 11 subsection 1b, and if I will put here 50,000, it will automatically become 0 and the balance will also become 0. So of course if you have given any other reason, you have to utilize the amount which was opted in financial year 21-22. You have to utilize it in financial year 22-23. If not utilized, then it will be taxed under section 11 subsection 1b. Then let's move to schedule DA. So of course, if you have not been able to utilize the earlier year's option exercise amount in the subsequent financial year, then it will be liable to tax under section 11 subsection 1b, which I told in my earlier part also. So only then you have to fill this particular schedule. I am clicking it without filling anything. Then comes schedule J. Now in schedule J, there is details of corpus. So if the organization has any corpus fund available, only then they have to fill schedule J. So the corpus donation, under corpus donation you see there are 3 options. One is representing donations received for the renovation of repair of places notified under section 80G2B on or after 1st April 2020. Then other than 1 above received on or after 1st April 21, and then there is other than 1 and 2 above. So the organizations which has received corpus donations before 1st April 21 and the fund is lying in their balance sheet as corpus fund, they have to select other than 1 and 2 above. Why this bifurcation has been given? Because from 1st April 21, the corpus donations was not allowed to be utilized for any charitable purposes apart from keeping it invested in the modes specified under section 11 subsection 5. So if the corpus donations was utilized, that amount was not considered as an application with effect from 1st April 21. So that's why this bifurcation is being asked. So the organization which has opening balance as on 1st April 21, in the corpus fund, they will select other than one above. They have to give opening balance as on 1st April 22, corpus not applied till 31st March 22. You see, corpus not applied till 31st March 22. You have to give the opening balance of the corpus. Suppose it is 1 lakh rupees. If you have applied the corpus during the financial year 22-23, let's put it 0. Amount invested or deposited back into corpus, it's not applicable. So let's put 0. Again here, financial year in which 4 was applied earlier, in this case it's not applied, it's not applicable. So keep it the same. Now here the point is invested in modes specified in this under section 11 subsection 5 as on 31st March 23. So of course the entire corpus amount should be kept invested, and click on add. If the organization has received corpus donations after 1st April 21, then they need to select other than one above received on or after 1st April 21. The opening balance here should be whatever you have received in financial year 21-22, only that opening balance should be given here. So suppose on 1st April 22, the corpus of the organization was 1,50,000. So 1 lakh we have given before 1st April 21 because we received it before financial year 21-22. In financial year 21-22, the organization received 50,000 rupees. So the opening balance as on 1st April 22, we will put here 50,000 rupees. During financial year 22-23, if we have received any corpus, we should mention here, suppose 50,000 rupees again. Applied during the year, no. You have to keep it invested. So it should be 1 lakh rupees. Amount taxed in assessment year 22-23, no, because we have not utilized it. So click on add. Now you see the total of your corpus as on 1st April 22 should match with this total and not 1 lakh rupees. Because here when you selected other than 1 and 2 above, this 1 lakh was the amount of corpus fund which was created before 1st April 21. And then this 50,000 was received between 1st April 21 to 31st March 22. So when your total corpus donation is 1,50,000 as on 1st April 22, which is the beginning of the financial year 22-23 for which you are filing the return, you have to break it. You have to break it between the corpus fund which was there before 1st April 21 and the corpus fund which was created after 1st April 21 from the corpus donations received with effect from financial year 21-22. They only want to ensure here in the corpus schedule that the funds which was received after 1st April 21, it has been kept invested in the modes specified under section 11.5 and the fund has not been utilized for the any purpose other than section 11 subsection 5. Then comes the details of loans and borrowings. What was the opening balance? If the organization has applied the amount from the loans and borrowings, you have to give here. Then the repayment amount, again in the same year when the amendment for corpus came, in the same year it was provided that the organization shall not utilize the loans and borrowings towards the application of the organization. So if the organization is using any loans or any borrowing money for the expenses of the organization, it will not be allowed as an application in the year of in which it was applied. So it will be considered as an application only in the year of repayment of loan or borrowings. So that's why these details are being asked. Then is part B, details of corpus investment or deposits made under section 11.5 as on 31st March 23. So here is a change in the income tax return. They have inserted the word corpus before the investment or deposits. So in our opinion, only the investments of the corpus fund has to be given here and not the entire amount. So suppose if you have put it in fixed deposits, or it is there lying in the separate bank account which is there for the corpus. You have to select deposits in scheduled bank or cooperative societies as per section 11 subsection 5. Then investment out of, again, whether it is other than 1 and 2 above, whether it is out of the corpus fund created after 1st April 21, or it is for the representing donations received for renovation or repair of places notified. So suppose I select other than 1 and the amount of investment is 50,000. But don't forget, you have also received corpus after 1st April 21, which is to the tune of 1 lakh rupees, 50,000 in 21-22 and 50,000 in 22-23. So your total corpus investment should be 1,50,000, which should match with the details of the corpus which you have filled here. So I think corpus for before 1st April 21 was 1 lakh. So you see this, the details of corpus investments or deposits made under section 11.5 as on 31st March 23 should match with the corpus fund. If it's not matching, this means you have utilized the corpus donations for some expenses of the organization, which is not allowed. However, if the organization has utilized the corpus money which was there before 1st April 21, there is no harm in it and no taxability will be there if the organization has already utilized it before 1st April 21. In part C, it has to be given that whether any investments has been made in the concerns where the specified persons have substantial interest. So in our case, it will be 0. Then in part D, other investments as on the last day of the previous year. So if you have any other investments in any company or concern, the details has to be given. Then if you have received any voluntary contributions or donations in kind, but it is not converted into investments in specified modes, the details has to be given in part E. So let's click on confirm and move ahead. Then is the balance sheet. So balance sheet is mandatory to be filled. Part A is sources of funds and part B is application of funds. So in the sources of funds, if you remember, the first details is corpus fund. So if you remember our schedule J, where we filled the details of the corpus, other corpus received on or after 1st April 21 was 1 lakh rupees. Corpus other than A and B was 1 lakh rupees. Then comes income accumulated under third provision to clause 23C of section 10 or section 11.2. So the amount which we accumulated during the year was 1 lakh under section 11.2, and the amount which was left out from the previous accumulation was also 1 lakh. If you want to recheck, let's go back and recheck once. You can see here the closing balance is 2 lakh rupees. And in case of section 11 subsection 1, the closing balance is 1 lakh rupees. So now let's move on again to the balance sheet. Please remember, the total of A, B and C should match with the corpus fund reflected in the balance sheet, and the amount reflected as general fund in the balance sheet needs to be bifurcated between D, E and F. So suppose in the balance sheet, your total general fund is, or the trust fund what you call, is 10 lakh rupees and the corpus was 2 lakh. So the 2 lakh is bifurcated, one after 1st April 21 and one before 1st April 21 as we filled it in schedule J. So now the 10 lakh has to be bifurcated in D, E and F. So now we checked that the closing balance of accumulation under section 11 subsection 2 is 2 lakh rupees. So here we shall fill 2 lakh rupees, and the amount which has been deemed to be applied for current financial year 22-23 is 1 lakh rupees. So we will put here 1 lakh rupees. Now there is no option for general fund, so we need to specify the general fund under any other reserve. So let's put general fund. Here we need to deduct from the total general fund the amount filled for section 11.2 and section 11.1, that is 2 lakh and 1 lakh. So 7 lakh has to be filled here. So our total fund becomes 12 lakh rupees. There was no loans and borrowings. If you remember, we have not filled it. There are no advances. And let's click on add. So our total liability side becomes 12 lakh rupees. Now comes the application. Suppose our gross fixed assets is 5 lakh rupees. Depreciation is 1 lakh. Now comes investment. If you remember, we have a corpus fund of 2 lakh rupees and the amount accumulated under section 11 subsection 2 for earlier year as well as this year combined is 2 lakh rupees closing balance. As you must be aware that the corpus fund as well as the amount accumulated under section 11 subsection 2 has to be kept invested in the modes specified under section 11 subsection 5. So here we are assuming that both the amounts of the corpus fund as well as the accumulation has been kept invested in the fixed deposits. It can also be in mutual funds, it can also be in government securities, it can also be as a separate bank balance for the corpus fund. But here we are assuming that it is invested in fixed deposits. So let's put 4 lakh rupees. You might question here that what about the 1 lakh which was there in section 11 subsection 1, the deeming application. For section 11 subsection 1, there is no such rule that it has to be kept invested. So it can lie in your bank balance also. So that's why we have assumed that 4 lakh rupees has been invested, right? Now you see here accumulated balance or any other reserve. They are asking under current assets or loans and advances. Here we can give the breakup. Inventory is 0. Sundry debtors is 0. Now is the balances with bank. Suppose let's fill here 2 lakh rupees. And cash in hand 1 lakh rupees. Then there are loans and advances. Suppose it's 0. Sundry creditors is 0. Other payables is 0 and provisions is 0 because we are assuming that we have following cash basis of accounting. Because we are assuming here that we are following cash basis of accounting. So the sundry creditors, other payables, provisions all are 0. Here let's fill other advances 1 lakh rupees so that the balance sheet matches. If there is a deficit in the general fund, I repeat, please don't confuse this accumulated balance to be of the accumulation under section 11 subsection 2. It's not that. If you see here, in bracket it's written deficit. So if your general fund is in negative due to over application, only then you have to fill the amount in point number 4. Again, the breakup is asked out of 5, means out of the total application, what is the amount which is invested in the modes specified under section 11 subsection 5 and what is the amount which is invested in modes other than that specified under section 11 subsection 5. So let's assume that 4 lakh rupees is here and here it's 0. Although I repeat, the bank balance is also covered under section 11 subsection 5. So you can also give a 6 lakh rupees, which is not wrong. And click on add. Please ensure that the sources of fund and the application of fund amount matches. Click on confirm. Then let's move to Schedule R. In Schedule R, you need to fill the amounts only when there is a difference between the corpus as reflected in Schedule J and the corpus amount which is reflected in the balance sheet. In our case, both the amounts are same. So we need not fill this schedule, but I am explaining when we need to fill this schedule. The amount of corpus which was received before 1st April 21, which means this 1 lakh rupees, corpus other than A and B, right? I explained it in detail while filling Schedule J. So the amount which was received before 1st April 21, there was no such rule that the corpus cannot be utilized for any other purpose and it has to be kept invested. There was no such rule before 1st April 21. So if the organization has used this 1 lakh rupees for purchase of fixed assets or any other reason, you can fill the amount here and reconcile the difference between the closing balance of the balance sheet and what you have filled in Schedule J. But the amount which was received after 1st April 21, that amount has to be kept invested mandatorily in the modes specified under section 11 subsection 5. So there should not be any difference between the amount filled in Schedule J and the amount filled in the balance sheet. If there is any difference, it can only be because of the purchase of fixed asset, which is also covered under section 11 subsection 5 only to the extent of purchase of immovable property or investment in immovable property, right? I hope this is clear. So let's click on confirm for the time being. So now let's move on to the most important part, Schedule VC, details of voluntary contributions. So if you remember Schedule J, corpus representing donations received for the renovation or repair of places was 0. Corpus other than above, we received during the year 50,000 rupees. Then is other than corpus donation. Please remember we are filling domestic contribution first. Part A is domestic contribution. Foreign contribution will be filled in part B. If you have received any government grant, whether it is central or state, you have to fill it here. Now comes grants received from companies under corporate social responsibility. So if the organization, the trust or the society or Section 8 company is registered for CSR funds with the Ministry of Corporate Affairs and have received any funds from the companies under the CSR scheme, they have to fill the amount under point number B. So suppose this trust has received 1 lakh rupees. Other specific grants, if you have received any funds in India from any company or from any individual, but the purpose has been specified that only for this purpose it can be used, you can fill the amount here. Suppose there is no such grants received. Then is other donations which you are receiving voluntarily without any specified purpose attached to it. Suppose this is 5 lakh. So the total voluntary contributions including corpus which you have received in India or from Indian organization or individuals, it becomes 6 lakh 50. Please remember, if you are registered under CSR with the MCA, you need to fill the registration details which we explained in the general information also. Then comes foreign contribution. Now foreign contribution, under foreign contribution also you can receive money for corpus. Usually they give it for any specified purpose, but sometimes the organization also receive towards the corpus. We assume that they have not received for corpus and they have received for other than corpus donation. So suppose 5 lakh rupees again they have received from foreign. In point number 4, it is asked, specify the purpose for which foreign contribution has been received. So since there is only one box for filling this, let's put charitable purposes. Anonymous donation, this is usually applicable to all the trusts and societies, but if you remember our video on the anonymous donations, if you are a purely religious organization and you show the amount in point number D, there is no issue. No tax will be charged. But if you are a charitable organization, it should not exceed 5% of the total donations received. You see, it will be automatically calculated. 5% of the total donations received at serial number C plus DI or 1 lakh, whichever is higher. So they will automatically calculate it for the charitable organizations. So for the time being, I am putting here 0 and clicking on confirm. Schedule AI, details of aggregate of income derived from the previous year excluding voluntary contributions. So if you have any other income, suppose if you are running a school or you are running a children's home or you are running an orphanage home or old age home and you have any other receipts, or if you are running any other projects for which you have received any money apart from the contributions, you have generated any funds because it's an income generating project. So you need to fill the details in schedule AI, because schedule VC was only for voluntary contributions. Here you need to bifurcate the amounts in the natures given: receipts from main objects, receipts from incidental objects, rent, commission, dividend income, interest income, agricultural income, net consideration on transfer of capital asset. So suppose you are an educational institution and you have received donations also as well as school fees also. So it should be filled in receipts from main objects, because for an educational institution, the main object is education and school fees is very much directly linked to the main object, which is education. So suppose it's running a school. So 5 lakh rupees should be filled here. Then receipts from incidental objects. What can be the incidental objects? Incidental objects can be, suppose if a school is selling a uniform or they are selling stationery items, they can fill the amount received from those activities under point number 2, receipts from incidental objects. Suppose it is 1 lakh rupees. Now rent. If the organization, the trust or the society has given their immovable property on rent to any tenants and they are deriving rent income, you can fill the amount under point number 3. Suppose again this is 50,000. Commission, dividend, suppose I am putting 0 for the time being. Interest income is bank interest as well as interest on fixed deposits combined, can be put under point number 6. Suppose again this is 1 lakh rupees. Agricultural income, net consideration on transfer of capital assets. If any asset has been sold during the year by the organization, the net consideration amount needs to be filled here. If you have any other income apart from the income for which the bifurcation is already provided, you can specify the nature of the income and the amount in this box. Click on confirm. Now comes schedule A, amount applied to the stated objects of the trust or institution during the previous year from all sources referred to in C1 to C7 of this table. So now in schedule A, you need to bifurcate the expenditure of the trust, which is also called application of income, nature wise as well as revenue wise and capital wise. So the revenue expenditure and capital expenditure needs to be bifurcated object wise as per the objects of the organization. In point number 1, they have asked donation to trust or institution registered under section 12AB or approved under section 1023C other than corpus. So if you have given the amount directly as a donation to any other trust or institution which is approved under section 12AB or 1023C and which is not in the nature of corpus donation, you need to fill the amount under revenue or capital. So of course it will be revenue expenditure and not capital expenditure. So suppose this organization is given 2 lakh rupees to any other trust or institution as a donation. Now comes religious. So if you have any religious expenditure in nature, you can bifurcate the amount in revenue or capital. Suppose if this organization was religious in nature and have many churches under it or many temples under it or any other religious places under it, and they have constructed any religious place, so it will be shown under capital, and whatever religious expenditures they have done, it will be shown under revenue. Suppose this is 0. Relief to poor. Now, as I explained in my video earlier, if you are sponsoring the children for any educational purposes, in our opinion, it's relief to poor and not educational, because the organization is not directly running the school. If the organization is running a school, then it should be educational in nature and not relief to poor. Apart from that, if they have given any charity directly to any students, apart from running a school also, then only that portion of the amount which they have given directly for charity should be shown under relief to poor, and the rest of the expenses should be under educational. So let's keep it simple for the time being. Suppose this organization has also helped the poor people of their community for educational purposes or for medical purposes or during COVID relief or for distribution of any blankets or food to help them. So let's put that amount under relief to poor. Suppose it's 3 lakh rupees. Now suppose for educational purposes, the organization has spent 5,72,500. For yoga, let's put 0 for the time being. For medical relief, let's put 0. Preservation of environment, let's put 0. Preservation of monuments, let's put 0. You need to check your applicability as per the objects of the organization, right? Cost of new asset for claim of exemption under section 11 subsection 1A restricted to the net consideration. So if you remember in the schedule AI, where we need to fill the net consideration amount on transfer of capital asset, that amount, if we have invested entirely in the new asset, that amount, I repeat, the amount of net consideration received during the year on transfer of capital asset, if we have invested the entire amount for the purchase of new asset, the entire capital gain which will come shall be exempt under section 11 subsection 1A. I will also tell you about the alternate solution to that. We can put the amount of entire net consideration as a total income and not claim exemption under section 11 subsection 1A. Both options are available to the charitable organization. Let's put 0 here for the time being. So you see, our total expenditure becomes 10,72,500. If you remember, our total income was 19 lakh. So let's reconfirm. If you check the total contributions, it was 11 lakh 50. And if you check schedule AI, the amount was 7 lakh 50. So the total becomes 19 lakh. Out of 19 lakh, 50,000 was corpus donations. So the amount of income on which 85% amount should be applied. Out of 19 lakh, 50,000 was corpus donation. So actually, the organization need to spend 85% of 18 lakh 50,000 rupees, which comes to 13 lakh 72,500, right? Let's check the total income. Under schedule VC, total contribution was 11 lakh 50,000. And the income other than voluntary contribution under schedule AI was 7 lakh 50. So the total becomes 19 lakhs. Now for the understanding of the viewers, if your total income is 19 lakhs, out of which, if you remember, 50,000 was corpus donation, which is exempt. So the net income becomes 18 lakh 50,000. Now, all of you must be aware by now that 85% of the total income has to be applied, which becomes 15 lakh 72,500. So the organization, the trust, has to spend 15 lakh 72,500 in order to claim exemption. Now, if you remember here, we have accumulated under section 11 subsection 2 1 lakh rupees this year, and under section 11 subsection 1 we have exercised the option of 1 lakh rupees, which we filled in the relevant schedules. So actually, the organization must have spent 13 lakh 72,500. Only because of that, we have accumulated under section 11 subsection 1 and also under section 11 subsection 2, because 2 lakh rupees was short. This means in schedule A, we need to change, suppose let's change this figure to 7 lakh 72,500. To 8 lakh 72,500, and the figure will become 13 lakh 72,500. So let's click on confirm. Then comes schedule of capital gains. First, you need to select the type of capital assets sold by you in order to continue. So whether it was land or building or both, or any debentures or any listed securities, or any sale of assets other than listed above. So in our cases, it's not there, but let me select any one of the options to explain you. Let's click continue. You see the kind of details they are asking. Total short-term capital gain, total long-term capital gain. Here you need to select the nature of capital gain, whether it is short-term capital gain or long-term capital gain. In case of depreciable assets, it will always be short-term capital gain irrespective of the period of holding. However, in general, if the asset has been held for more than 3 years, it will be long-term capital gain, otherwise it will be short-term capital gain. So suppose in our case it was a depreciable asset. So let's click on short-term capital gain. Now in point number A part 1, it's written in case assets sold include shares of a company other than quoted shares, enter the following details. So in our case, it will be 0. In part 2, it's written full value of consideration in respect of assets other than unquoted shares. So in our case, the amount will come here. But since we have not sold any assets during the year, I am putting it 0. Otherwise, you should have filled in A part 2. Then the cost of the asset has to be filled here, or any expenditure which is incurred in relation to the transfer needs to be filled here. So for the time being, I am putting 0. I just clicked this section of capital gain only to explain that where the amount has to be filled in case you have sold any capital asset. Click on add. Then let's move on to schedule income from other sources. This is actually not applicable to us because we have filled all the income which was not in the nature of donations in schedule AI. In schedule AI, we have filled details of aggregate of income derived during the previous year, excluding voluntary contributions. So we can ignore schedule OS completely. Schedule OA is also not applicable to us if we are not carrying on any business activity. So the trusts or the societies or section 8 company which are carrying on any business activity, they have to fill schedule A completely. You see, they are asking, do you have any nature? Do you have any income under the head business and profession? The nature has to be given, the code subsector and the trade name has to be given. If you have any branches, what method of accounting you are following, mercantile or cash. Then the details of the closing stock has to be given and how you value it. So all these details has to be given in case you are carrying on any business activity. So let me just click on confirm for the time being. Then comes schedule current year losses. Again, there was an amendment in the act that the charitable organizations cannot carry forward their losses. So again, this schedule is also not applicable to us. Then is schedule SI. If you have any income which is chargeable on any special rate, suppose if you had any short-term capital gain or long-term capital gain, then it was a income where special rates was applicable. So only then you have to fill the schedule, else you can ignore this schedule. You need not select the schedule at all. But I think it was a mandatory schedule. Correct. It was a mandatory schedule. Even this schedule was mandatory, but both of these schedules will not be applicable. Schedule CYLA, current year losses, this will 100% be not applicable because the charitable organizations are not allowed to carry forward any losses. And schedule SI will be applicable only when there is a certain nature of income on which special rates are applicable. Else, you need not fill anything under schedule SI. Just click on it and click on confirm. Now let's move on to schedule part BTI, computation of income. You see, this section of the return is auto-filled because it has taken all the amounts from the relevant schedules, schedule VC, schedule AI, and whatever you have filled in the previous schedules. You see here the amount in point number 10, income not forming part of item number 9 above, it's 76,08,000. I think this amount has come from schedule OS. Correct. So here, if you just break it up, you see this amount, I suppose, has been auto-filled from the AIS and TIS statement, right? The interest from savings bank, the deposits and the income tax refund. So, but we need to fill these details in schedule AI. So let's delete it from here because it should not be a part of income from other sources. Please remember to delete it, right? Because this will not be a part of schedule OS in the case of charitable trusts and societies. Because we have already filled it in schedule AI, if you remember, interest income, right? It should be filled here and not in schedule OS. So now I suppose part BTI, that amount must not have been reflected. Correct. So now let's check part BTI. So our total income is 18,50,000, 13,72,000 which we filled as the application amount, 1 lakh for which we exercised the option under section 11 subsection 1, and 1 lakh which we accumulated under section 11 subsection 2 for which we filled schedule I. you see here the warning is being given. Please file Form 9A within the due date of filing the return of income to claim exemption under clause 2 of explanation to section 11.1. Similar warning is coming for 11.2 also. Please file Form 10 within the due date of filing return of income to claim exemption under section 11.2. So of course, we must have filed Form 9A and Form 10 before filing the return of income. Suppose we select here yes and choose the date somewhere in October. Now in point number 5, amount accumulated or set apart which does not exceed 15% of the income. Right? You see here now 2,77,500 is being taxable. It is showing as a taxable income. Right? But in case of charitable trusts and societies which are exempt, it should be 0. So let's move on to our example again. 18,50,000 was our total income, excluding excluding corpus donations which was exempt. So 15,72,500 should have been applied, which is the 85% of 18,50,000. So the rest 15%, which is 2,77,500, which is the statutory accumulation, that has to be filled in point number 5. 2,77,500. Once we fill it, you see automatically the gross income becomes 0. So click on confirm. Then comes schedule part B TTI, which is computation of tax liability on total income. Since our total income has become 0, of course the tax liability will also be 0. Just check it. Taxes paid will get automatically filled from Form 26 AS, which will be reflected in point number 9. You will see that amount in the refund because our tax payable is 0. Here a small question is that, do you at any time during the previous year hold any asset outside India or have any signing authority located outside India or have any income from other sources outside India? Click on no and you can go to preview the return what you have filled here. So just preview your return. Just click on next. Just check the signing authority. Give the designation of the signing authority which can be principal officer or if as per the designation of the organization. You need to give the PAN of the signing authority. The place and proceed to validation. You will see here validation is successful. You can download the JSON file as well as proceed to verification. When you click on proceed to verification, you will be asked to log in again and file it through digital signature or OTP, which will come in the mobile linked with the Aadhaar of the person verifying the return.
Thank you for patiently watching our video. For more such updates and tutorials, keep tuned to our channel and don't forget to subscribe it. You can also follow us on Twitter, Facebook, Instagram and visit our website for more such updates. Thank you.